There comes a moment in every empire's journey when its currency shifts from inspiring trust to demanding it. Trust, once compromised, seldom returns in its original form. The US dollar, once an emblem of stability and prosperity, now stands at the center of a global transformation. Its dominance is no longer guaranteed, and its assumed neutrality is increasingly questioned. Welcome to FluxFolio Finance. Today, we delve into what many are calling the dollar's endgame, not a complete collapse, but a gradual evolution away from the currency that has influenced global commerce for the past 80 years. Since the Bretton Woods Agreement in 1944, the US dollar has served as more than America's currency. It has been the framework for global finance. Even after Nixon severed its gold convertibility in 1971, it maintained its leading role in oil trade, capital markets, and military might. However, by 2025, this dominance has manifested in a new form: strategic, coercive, and increasingly politicized. The Mar-a-Lago Accord, introduced earlier this year, marked a shift from collaboration to pressure. Through tariffs, sanctions, and targeted economic strategies, the US has weaponized the dollar. The effects are rippling through bond markets, various currency regimes, and central bank balance sheets worldwide. A change in the Treasury ledger recently, faith in US debt has waned, although foreign holdings still persist. China, once one of America's largest creditors, cut its U.S. Treasury investment by $77 billion in 2024, reducing it to $759 billion, the lowest point in 15 years. Nevertheless, early 2025 showed slight improvement. By February, Chinese holdings stabilized at $784.3 billion, indicating some tactical buying. Japan followed suit. After decreasing its holdings last year, it added $46.6 billion in February 2025, bringing its total to $1.13 trillion. These shifts haven't gone unnoticed. The bond market is unstable, with 10-year Treasury yields reaching 4.47% by mid-May, close to an 18-month high. With $36 trillion in U.S. debt outstanding, pressures are mounting. Foreign investors hold $8.5 trillion, roughly 30.2% of all publicly traded treasuries. However, confidence continues to wane. The U.S. Treasury is projected to auction an unprecedented $31 trillion in 2025, with $3 trillion in maturities due. Refinancing this at elevated rates presents a formidable fiscal challenge. Emerging global alternatives. While the dollar remains crucial, nations are reconsidering its inevitability. The BRICS coalition, comprising China, Russia, Brazil, India, and South Africa, has ventured into new monetary experiments. Bilateral oil trades between China and Saudi Arabia are now done in Yuan. India uses rupees for Iranian crude purchases. Russia and China conduct commodity exchanges outside of SWIFT. In this era of de-dollarization, gold is regaining significance. Central banks acquired over 1,100 tons in 2024, the highest amount in contemporary history. China, India, Turkey, and Poland led this gold rush. The trend appears to continue into 2025. Gold offers protection against sanctions, sovereign control, and monetary neutrality, qualities that dollars can no longer promise. Simultaneously, Singapore, Switzerland, the UAE, and the EU are diversifying their reserves by increasing gold holdings, boosting yuan allocations, and exploring alternatives like a digital euro. These strategic shifts are deliberate, not hasty. The dependence paradox. Yet, despite pushback and financial repositioning, the global economy remains intertwined with dollar frameworks. Stablecoins, particularly Tether and USDC, bolster this system. As of Q1 2025, Tether holds $120 billion in U.S. Treasuries, making it one of the largest private U.S. debt holders. Each time crypto traders utilize dollar-backed coins for transactions, they inadvertently support the very system they seek to challenge. The irony deepens with crypto's resurgence. Fueled by liquidity injections and stablecoin movements, Bitcoin surged to $103,700 as of May 14, 2025, with intraday highs nearing $104,870, according to Yahoo Finance. That's a nearly 20% increase in just a week. Just days earlier, it traded at $85,000. Now it approaches the $100,000 mark again, propelled by institutional demand and macroeconomic anxieties. This rally transcends having cycles or ETFs. It springs from the very fiscal excess the dollar system produces. Bitcoin, created to evade fiat dependency, now thrives on dollar-fueled liquidity. In essence, crypto's rebellion is bankrolled by the panic instigated by fiat. The Fed's balancing challenge. All this unfolds under the vigilant and pressured gaze of the Federal Reserve. Jerome Powell has kept interest rates steady at 4.25 to 4.5%, resisting political pressure from the former Trump administration, which aggressively seeks cuts. The logic is straightforward. Over $3 trillion in Treasury debts mature this year. Lower rates would ease refinancing and support Mar-a-Lago's ambitious buyback strategy. Nonetheless, Powell prioritizes inflation. With tariffs driving up prices and trust in U.S. fiscal management diminishing, the Fed remains steadfast. Any rate cuts absent disinflationary signs could damage dollar credibility. Yet, this battle extends beyond economics. Speculation surrounds Powell's job security. While the Federal Reserve Act shields him from arbitrary removal, political chatter suggests the White House might test those limits. Should Powell be dismissed, investor confidence in U.S. monetary independence could falter, weakening the dollar's perceived neutrality. A global rebalanced. Nations worldwide are gearing up for a future without unchallenged dollar dominance. Saudi Arabia and the UAE are diverting petrodollar flows toward yuan and gold. The EU is expediting its digital euro initiative, while India expands rupee-based transactions for energy and trade. Singapore and Switzerland, historically strongholds of monetary stability, are hedging their foreign exchange reserves. In the meantime, the IMF has alerted about slowing global growth. U.S. GDP forecasts have been revised to 1.8% for 2025, down from 2.7% at the year's onset. China's growth is anticipated at 4%, and overall global expansion has decelerated to 2.8%. The IMF, World Bank, BIS, and OECD all identify rising trade tensions and policy uncertainty as significant risks. The Spanish blackout of April 2025, which left 50 million people without power, illustrated the world's vulnerability to hybrid threats, from cyberattacks to infrastructure disruptions. Trust, both in currencies and systems, has become increasingly scarce. The future of the dollar: 3 scenarios. The world is not awaiting collapse, it is preparing for transition. 3 possible paths are forming. 1. Managed dominance. The dollar remains prominent but exhibits softer edges. Global investors still retain treasuries, the Fed maintains independence, and geopolitical tensions are managed. The system bends without breaking. 2. Fragmented multipolarity. Reserve diversification accelerates, with gold gaining importance. Regional currencies, like the euro, yuan, and rupee, increase in usage. The dollar continues to be significant but loses its universal status. Trust evolves toward a network of alternatives. 3. Decisive break. A sudden market event, bond crisis, or geopolitical fallout could shake confidence in treasuries. BRICS or a gold-backed digital currency might take hold. A new global standard could emerge, decentralized, regional, or commodity-linked, with the dollar's influence sharply contracting. In conclusion, a currency in transition. The dollar is not dying, it is evolving. Its absolute power is diminishing, neutrality is under scrutiny, and its foundation is being tested by tools that once ensured its dominance: tariffs, sanctions, and debt monetization. In this evolving landscape, what emerges is not a single currency but a diverse array of options: gold, yuan, stablecoins, cryptocurrencies, and regional tokens. The future will not be dictated by a sole issuer but balanced by many. This signals not the demise of the dollar, but the decline of its empire. You've been watching FluxFolio Finance. If this message resonated with you, please share, subscribe, and leave your comments below. The narrative of money is just beginning, and we are here to share it.